India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. US markets are looking up, looking good, breaking some of those big round numbers. Can the market here stabilize as well? Yesterday in the last hour it did. And the hope is we actually build on that this morning. I'm Prashant. With me, my colleague Surbi and Nigel. Guys, good morning.
Hi, morning.
Hi, morning. Big round numbers. 20,000 is a nice round number for the Nasdaq, right? And I guess this whole Make America Great Again trade is working for now. It's really working for the US bulls.
Well, that's right. And India has underperformed for the last few trading sessions. So we'll have to hope that we give up that underperformance. But I think with the recent correction, both on price as well as time, maybe a lot of those negatives are slowly getting into the price. And a lot of those large cap names are coming to levels that, you would want to get in.
I think even some mid caps and
Indeed,
small caps, etc. as well. So, we'll of course address all of that and some base building. Essentially, that's the hope, and that's what we said yesterday as well. Around last week's lows, we broke that, but we managed to end above it, about 23,100. I'll get to levels in just a bit, but let's take it from the top in terms of what happened. So S&P set a new record high above 6,100. It kind of came off a little bit towards the end, but was decent, 0.6% higher by close. You had the Nasdaq Composite, which ended above the 20,000 mark, 1.2% higher. You had the tech and AI stocks, which extended Tuesday's gains from the Stargate venture announcement. Look at stocks like Oracle, for example. Even Tesla, many of those. Netflix was a big mover. Of course, it reported very strong, some of the highest subscription numbers, and stocks at an all-time high. So, tech and, of course, AI is essentially what did very well, and that showed up in the Nasdaq. 10-year yield, nothing, 3 basis point change, slightly higher. Dollar index, still dithering, but off the highs, was up a little bit, 108.27. But no directional kind of a takeaway from these macro markets. Oil prices around 79, 0.4% lower. So once again, it's kind of calm. It's not very much here or there. It's largely equities in the US which continue to do very well. So it gets us straight to levels here. So we ended higher yesterday, and the important thing was there wasn't selling pressure. Actually, the move started at about 2:10 our time, both for the Nifty Bank, for broader market indices as well, the mid and small cap part of the space. So where does it leave us in that sense? Nifty, step by step, right? First, we need to trade above the 20-hourly average, which is at the 23,200 level. It's very, very close by. You left off at 23,155. It's about 45, 50 points away. The swing high stands at 23,426. That is the swing high, which was made day before yesterday. So that's Tuesday's high. Is 23,426. And then, of course, it was a big candle that day. And similarly, the low that day essentially is a level to watch. If you get a break of that, then I guess all bets are off once again. So that level is 23,976 on the downside. That's the day when we broke the prior Monday's lows, the 13th lows, broke 23,000, made that low, and then, of course, we've been able to come back up. So those are some numbers for the Nifty. For the Nifty Bank, again, you can look at but because this is more volatile, I'm not putting the hourly numbers. I'm just looking at the swing high, which is 49,650 in the case of the Nifty Bank. We're already at about 48,700. And on the downside, that level basically stands at 48,74. Now, the Nifty Bank has not broken that level. The Nifty did break 13th lows, but the Bank Nifty has not. And that's the 13th January level on the downside, which has not come into the equation so far. So, hopefully we don't have to look at those levels and the market does some base building. The overwhelming view still is that you'll get a bounce, and the bounce has to come. And it has to come. That's the nature of things. After immense selling, all technical readings, etc., are showing very, very oversold signals. But the overwhelming view, out there is that, well, this is still a larger downtrend, and the market will eventually get to about 23,500, 23,400 kind of levels close by, and then you will start to come off once again. So that's the backdrop, that's the expectation. So be mindful of that as you approach the market in terms of at least the indices. 60 points lower on the GIFT Nifty is what the start is indicative of. Surbi.
Absolutely. But the chatter around, what I've started hearing within friends and family now is that, the portfolio is down, all my funds are down, nothing that I've bought in the last 6 months is working. So, that sense of exasperation, I think it's beginning to creep in because the market's been testing patience.
I heard a nice one yesterday. My portfolio is flat, not too bad.
Yeah, that's true.
That's a sea change from what we were hearing. My portfolio is up
30% and 20%
in a month and all that. So, now having a portfolio that hasn't got hit, I think.
Is a not performing portfolio? Absolutely. Yeah. So I think we're still waiting for some of that positivity to come back. But there's plenty of it on Wall Street. And by the way, these indices that were roaring higher, I guess it's a mix of the fact that corporate earnings have been very good, big bank earnings have been good. Netflix's numbers, like Prashant mentioned, were blowout. The subscriber additions are now above 300 million. And not just that, they increased their 2025 revenue guidance by a whole $500 million. That's the extent of optimism that one company is saying, but it's obviously not the only one. And for the time being, it seems that this whole economic optimism and this whole Make America Great Again narrative, coupled with the expectation of easier, regulation in the US, that's really powering Wall Street higher. Anyway, now speaking of Mr. Trump, yesterday he made some big comments on geopolitics as well. And I think it's important to note that because now he's saying that this war needs to stop, the Russia-Ukraine war. And these are comments that he made on, his platform, social media platform, saying settle now and stop this ridiculous war. It's only going to get worse if we don't make a deal soon. So basically what he's saying is that he's threatening Russia with more tariffs and sanctions, but he says that's not the route I want to take. That's not the way to do it. The easier way would be just to come to a table and to get a deal done. So he's making a huge pitch for that and expects some more good news, at least on the geopolitical front, and how that plays out. On Asia, markets are mixed, but the bias is very clearly positive. Most of the key markets around us are actually in a nice shade of green. Though the numbers are a bit iffy. That's the Hang Seng for you, up about 0.5% right now. South Korea is the one where the economic data has not been very good. GDP numbers came out for the December quarter, and it's the lowest rate of growth in the last 6 quarters for South Korea. 1.2% is the number. But the market seems to be sort of moving along. The Bank of Japan is starting its 2-day meeting. It's today and tomorrow. And there's a rate hike expected. Remember, the Bank of Japan has been on pause for the last couple of months, so waiting to see what the Fed has to do, waiting for the US election to get over. But the indication is that we'll get a quarter basis points rate hike tomorrow when that meeting ends. So let's see how that plays out. The markets are fine right now, including the Nikkei, which is up in green territory. For us, quickly coming to fund flows, more of the same. Selling of about 4,000 crores from the institutional investors as the market was trying to bounce off the lows yesterday. At least there was some recovery, and largely that support has been retail flow or the domestic institutional flow, which was the case yesterday also, because 4,000 crores of selling offset by 3,600 crores of buying from the institutional side. Results and numbers, lots of them, and we'll talk about this as we go forward. BPCL, the LPG under recovery, and remember you've heard headlines around this, that the government will come and support and help alleviate the LPG under recovery pain, and perhaps it needs to happen because BPCL's performance has been marred by exactly that. For lever, there's no volume growth, flat. Manglam was telling us it could be 1 to 2%. It's not even that. It's flat volume growth. Numbers are absolutely, dismal, nothing to talk about. But it's their acquisitions. They're taking the inorganic path with brands like Minimalist. That's going to be, center stage, and it'll be the bulk of the chatter around lever today. So watch for that. Pidilite is relatively better off. Volume growth has come in, along expected lines of about 9%. Margins, however, are under pressure. So let's see how this goes. Today is a very heavy day. There's Ultratech Cement, there's HPCL, there's Dr. Reddy's. Bunch of mid-cap IT companies like, Scient, Memphis is also reporting, and names like Indus Tower. The list is going to come up on your screen, or Jeevan Small Finance Bank. So it's pretty busy. I'm just going to end with something that our Delhi colleagues are reporting. It is budget season, and the market's got its nerves. And it seems that what TIMSI is picking up is that the budget is going to be front-loading capex, and the market will like the sound of that because it was this whole pickup in government capex, which you didn't have because of the general election last year. That kind of is, tempered the enthusiasm. So she's saying, expect it to be front-loaded. Where will it go? Infrastructure development, healthcare, EV, highway construction, and railway track expansion. So these are some of the big watch points in the areas. And let's see if there's some build-up, as we get into full throttle election mode, whether some positioning starts building up in these stocks, because they've been really battered down in the last couple of weeks.
Well, that's right. And the good news is that from February till, I think, November, there is no state election.
Yeah.
So that's good news, because then those freebies and those populist measures will actually take a backseat.
Correct.
And then you'll see that capex push, which in the last few months, we've seen plenty of state elections, which has curtailed that. Well, let's focus on the cues overnight. The U.S. markets, as you said, well, they did quite well. Brent crude prices well behaved. In fact, a little bit lower. The dollar index softer, and the yields as well pretty well behaved. So no worries on that front. Yesterday was an inside day. What does that mean? Well, the highs of yesterday was lower than the previous day, and the lows were a little bit higher. So we were in that range yesterday. But today, you'll have plenty of action, because today, in fact, you'll be having the weekly expiry that plays out. So that adds some more spice for today's trade. Yesterday, we saw a big recovery from the lows, and as you all mentioned, the institutions are nullifying each other. But you had a bit of a short covering bounce that played out because the open interest was lower, and you did have the indices recover from the low point of the day, which was encouraging. The FIs, well, they added equivalent amount of longs as well as shorts, in yesterday's trading session, close on 3.5 to around 4,000 contracts or thereabouts. The good news was that on stock futures, the long addition was close to around 2:1. So close to 50,000 contracts were added. The previous trading session, we saw some unwinding of longs on stock futures. So that's another healthy sign that I'll be looking at. The FIs, as well as the clients on opposite ends of the spectrum, FIs net short more than 3 lakh contracts. The clients net long close to around 3 lakh contracts. For the time being, the FIs seem to be having the upper hand. But if you're going to get more amount of talk with regard to capital expenditure and things that are good for the economy, and maybe some monetary easing as well, well, those FI shorts, they could get covered out. For the time being, there's no yet sign of that. Moving to the options data, then these strikes expire today. So the 23,300 call was active. The 23,000 put as well was active. So if I'm looking at levels, the 22,950 mark becomes important. Last two sessions, we have gone to those lows and we have bounced off that. So that's very, very important. The 22,950 or thereabouts on the upside. 23,350, we briefly traded about that in the past week. But in fact, we broke that yet again. So that becomes a bit of a resistance level, going by the options data, going by the recent technical levels. The Nifty bank, you'll want it to make a higher high as well as a higher low. In the last couple of trading sessions, that has not happened. So you'll want the high to be above these levels, and you'll want it to protect the lows as well. Today is the weekly expiry, some kind of glimmer of good news. And if you can get the markets to trade in the green for a longer duration, then the shorts could get a little bit jittery, because of late we have been seeing the bears have an upper hand. Irrespective of the headline index, plenty of stocks have come to those levels where, in fact, you would like to gradually nibble in. So keep an eye out on a lot of them.
All right. Nigel, thank you very much for that. Well, that's essentially the setup and stocks to watch out for.